Hello, good morning, everyone. Welcome to the morning brief, Tuesday, June 2nd. Here's what we're going to cover today. First of all, great news. Squadron membership's up to 3. Thank you very much. If you're interested in joining, again, ototnow.com has everything you need to know about how to do that. As far as our standard 3 mission objectives, that's what we'll be talking about and answering questions about. As far as our tactical objectives this morning, we're going to talk about some must-own stocks. So names that hopefully are in your portfolio already. Otherwise, names you should definitely consider. And then secondly, as far as the building wealth incrementally over time, we're gonna have a bond discussion today. Whether you're in bonds or not, you do kind of need to understand what's going on as far as that particular market out there, because it can affect the equity market as well. As far as our flow, we're gonna go over the market review. Kind of interesting this morning in the green, right? After all of the negative headlines from the past couple of days, but market's in the green. We'll review the headlines, go over those 6 stocks that we have listed there. We'll get into our short-term discussion just prior to the open. I did not in my pre-screening see much of anything to take short, so a little bit thin on the short side. Yeah, that happens. So we'll see what we can come up with today. We will have our little competition around the market open, and then we will go back to the Q&A. What I did this morning different for the Q&A, again, this will be a moving target as it evolves and I come up with what's a better flow for everything, is I'm going to try to populate some questions in there. So you should be seeing 4 questions in there, 1 from Apex Predator and 3 from me. Again, you guys can vote on those by clicking like on which one you want me to answer first. And again, we'll get to those right after the market opens and things settle down. So that's how we're going to use that. You should have my questions in there right around the market open from now on. We do have tech support up if you're having any issues, and standard disclaimer applies. All right, let's go over to the TD Ameritrade board and take a look at where the market has been for the past year. As far as you know about the big run up, and you know about the big drop down. And then the channel trade 275 to 295, we talked about when things pop out of channels, they tend to significantly leave that channel. So the 275 to 295 range here in the SPY broke out of that and pretty much straight up from there and in the green today. So we'll kind of keep an eye on things all the way up to 305, but it's a nice move up on decent volume there. So as far as looking at how the days have gone, as far as you see the days in white here, so this is yesterday, pretty much straight up, kind of faded into the close. And then afterwards, this was around, we started, I think that was a Trump press conference where or maybe that was the Trump calling the governors weak sauce, that sort of thing. Took the market down, but then as everybody slept on it, and as we go around the world here, you'll see that the other markets are up across the globe. So pretty significant move up. So when I first checked them this morning, we're pretty high and then kind of fading into the open here. So kind of interesting to see how it'll work. But again, the long-term trend here, the last 3 or 4 days has been up, and I could see that breaking today. I really could. It's been a nice little run. Sometimes markets need to take a breather and go from there. As far as the earnings calendar, nothing really significant or moving markets that I have seen. Okay, with that, I'm going to take you around the world real quick back to CNBC. And so there's where we are with the futures. Let me refresh here while we're talking. And okay, so NASDAQ barely hanging into the green, Dow's up a little bit more. Again, the forces that are acting on the overall market, you have the good news stories of the economy opening, and then the bad news story of social unrest and exactly how that's going to play out, which is unknowable. But that's what we get paid to do that's where you invest, is to be able to navigate the unknowns. Okay, here's where we are, and looking across at Europe, there's the big numbers I was talking about overnight in Europe. So again, they're more focused on the opening and the recovery than having to deal with the protest countrywide like we're doing here in the US. Okay, as far as the Asian markets, again, all in the green. The Hong Kong situation has kind of settled down. So therefore, you can see U.S.-China tensions. That's going to continue all the way into the election. I think that will be I think that's what Trump, in my mind, wants to talk about going into the election, and not necessarily kind of get the social unrest behind us, get the COVID-19 behind us. Let's talk about being tough with China. And I think that's the narrative that he wants to put forth, and what his press secretary Kayleigh wants to talk about. And if you haven't seen any clips of her, absolute bulldog. Love watching her. She's a perfect person for the job, in my opinion. Okay, continuing on around. Here's where we were yesterday. Slight move up. We already talked about that. Bonds, again, anytime you see the 10 years kind of creeping up over time, 1% would be the absolute minimum that I would even consider somewhat normal. So this needs to continue up. As far as other normalization, above 35 and stabilized now from the big move Friday. That would be nice if oil continued on the 40. That would be nice. And then precious metals, we talked a little bit about yesterday if the social unrest would continue, you would have the opportunity, if you wanted to take a trade based on this, you could buy some gold. That's going to generally move up as you have people getting nervous out there. So that's around the world. We'll go back, check the headlines. Yeah, it was interesting. I saw this article from Cramer. The market has no conscience. So from a pure financial perspective, he's right. It doesn't really try to decipher moral from immoral, good from bad. Doesn't really, the market itself doesn't engage on that. However, I will say there can be the sentiment piece of that. If everybody's kind of depressed because our country's going to crud, or whatever your particular view on this is, then that can have an overall effect of people just want to kind of go to safety and sell a little bit just to keep a little more money around on hand. So it can affect it, I guess, in more of a second order. And then same thing when life is good and markets go up, the market doesn't have a conscience itself, but it does tend to celebrate good news begets more good news, and you kind of get into that momentum thing, both up and down. So yeah, Dick's retail stories, you see it in kind of the headlines up here. Dick's sporting goods is down. Lululemon is up significantly. Kind of a crazy chart. Off of lows of 140 there up to over 300. Have some of that. There's a couple of calls out for Microsoft and Apple to both top 2 trillion in the next couple of years. I do think that will happen. I don't see anything slowing them down. Okay, and a new game from Tencent. So remember, Tencent is if you think Fortnite. So for those of you that have heard me talk about Tencent or been invested in Tencent with me, you've got the Epic Games came out with Tencent, with Fortnite. Tencent Holdings was a 40% shareholder of that. So therefore, that was the way to invest in that. The new game, Valorant, just came out of beta yesterday or today. And so expect that out again. It's another free-to-play sort of thing where I'm sure you can spend all kinds of money in the game. So look forward to hearing some more news on that. I'm not really ready to go just hopping back into Tencent off of that because of the U.S.-China relations, but it's something to watch. And maybe hop into once if there's any resolution. But if that theme continues on into the election, then there will probably not be any real opportunity to kind of hop in there. Okay, and then the whole higher education thing, it'll be interesting to see how, if and when schools open and what colleges do for everything there. So kind of something to follow. All right, so taking us up to the Schwab Big Board. The theme for today is the basically best of breed stocks to own forever. So when you think of how to invest, there's many different ways. The one that I use personally, that I've used for years, and it's one thing when I talk to folks about how to invest, this is exactly what I say. You want companies that are best of breed in their space. You want companies with a high margin product, meaning it costs either they don't have a product if they provide a service that's high margin already, but they make a lot of money on their products. They have a moat, meaning their nearest competitor is a distant second if they can have it, and nobody can really overnight come in and topple them. And then so best of breed, highly addictive, high margin product with a moat and a catalyst for going higher if you happen to have the perfect situation. But those are the things that I'm looking for there. So when you look at the big board, you can see Apple, which you've heard, generally, that's all I've talked about for years as being the best stock out there. I do try to get folks some shares in Apple, no matter who it is. It's like, hey, if you're just starting and you buy one stock, just buy a share of Apple and go, right? Because it's that good. And if you remember if you've heard me tell the story, I was a Samsung kind of guy when the phones came out because I'm cheap and I didn't want to pay up for best of breed. So, but as I started my first Apple product, do you remember the little square iPod Nano that was out there that you clipped on your collar or whatever, you could go running with it with some earbuds? I remember opening that package and saying, "This is brilliant the way it was packaged." And then when I pulled the thing off the cord kind of went straight down, and it wasn't that crappy cord that I was used to from everything else up to that point. That was kind of the holy cow, this company has it figured out. Apple's part luxury. They have their hands, and it's considered a must-have product, highly addictive. It's just the place to have some money. And you can see that largely from the big drop in COVID, it has almost exactly recovered to its previous highs from there. Now, when you talk best of breed, that doesn't mean they're always going to go up. But these are long-term buy and hold type names. You do not have to worry about them. Apple may go down. I mean, it would drop all the way to 220 there, and that's a time to buy more or to add to your position. Not really ever a time to sell. I do trim sometimes. I'll generally trim the extra shares that are reinvested, but just hold it and you'll be fine. Over to Amazon, you can see that it hit like everything else coming into the COVID situation, but it was the number one no-brainer all-time investment in my book of, let's invest in Amazon because everybody's sitting there at home ordering online. And I do think that's the way of the future. And if you kind of combine it, so as an investor, you have all these investable themes out there. Well, every now and then they kind of touch each other, right? And the social unrest that's going on, and if it continues, we don't know the end of that movie, but if that continues, that also helps kind of reinforce that work from home theme of I'm not all that excited to now get out and about, especially if you're in a larger city. I'm not, so I can't really appreciate that truly, but I can conceptually think, I think I would. But also there's two sides of that too, because Amazon has also said it's cutting back deliveries in some areas because of the violent protests out there. So anyhow, again, the chart speaks for itself. If somebody's just starting out and they're like, well, should I have a share of Amazon? I'm like, yeah, you should. We're going to talk later about a $2,500 price point for entry. That's one of those. Just close your eyes and buy it, and then you'll be happy in 10 years that you did. Okay, over to Google, GWG, technically Alphabet's the name of the parent company. When you think of Google, if you were to advertise for your business, i.e. small business owner, now 2 businesses, if I go to advertise, I'm either going to Google or Facebook. And Google told me if I want to be like Round Rock Financial Advisor is kind of my tag for my website for the other business. So if I want to be on the front page, it's going to basically be $5,000 a year for me to do that. So, I'm not really interested in paying that. I like, learning things. So I learned about SEO, and I actually am at the bottom of the front page now, just from some SEO work. But you really only have 2 options. If you want to advertise effectively, you're going to Facebook or you're going to Google. I did not put Facebook up here because of the kind of the political clash that's going on right now, but I certainly did consider it. Okay, the next one is BlackRock. This may be a name you're not as familiar with. That'll come back up here in a second. So BlackRock is the company that's responsible for executing the big bond buyback program for the Fed. They own all the iShares ETFs that are out there, which are hugely popular. So when you think of how far it's fallen and then the climb back up, you can still even buy into BlackRock here. It's got a long runway. They're the best in the business as far as financial folks. So they're the way to go. Tons of assets under management, very strong balance sheet, not going anywhere anytime soon. Lower left is Blackstone, BX. They are the best in breed private equity firm. So when you think private equity, think of the next level of investing. Most of the folks on here are right around the cut line for the, accredited investor, or maybe you are an accredited investor. Well, that can give you access to private markets. Well, if you get into private markets, you're going to turn a 10 to 14% sort of return over annually. The only problem with that is you're going to have to stock your money away and not get it back for 7 to 10 years. So it kind of goes into the black box and comes back out. And we'll talk private equity another day. But Blackstone, the way for you to participate as a retail investor is to go in and buy their stock. Their stock kicks off about a 6% distribution. That's tied by whatever they bring in. They have to kind of kick back out 90% of it. So nice big juicy distribution there with Blackstone. It does move quite a bit with headlines, and it moves with the financials, and it's not really a financial, but it's considered one. So unfortunately, bad bank news or scary headlines in the economy can actually bring it down. And then last one is O, which is Realty Income, which is a real estate investment trust. This is the number one stock that I put folks in if they say, hey, I want to go into real estate. So that's why it's up here. It has been beaten down. There is a headline out, it was either last night or this morning, that said in April and May, Realty Income was able to receive over 80% of the rent. So that, are they back for good? I don't know. It's still kind of touch and go for your real estate investment trust type names, but as a long-term buy, I don't know if they're going to be, higher or lower at the end of this year, but I do know that you walk this out 3 years and they're going to be much higher. And they pay a monthly dividend, which is why you see all those D's across the top. I want to show you something real quick on FinViz. So I'm going to switch down here, share out the FinViz screen. And if you can put in, let's put an Apple into FinViz. Okay, when you say is a stock cheap for a price point, when you look at, and this is one of the questions we'll come back to a little bit later, is, Apple's at $322-ish a share, and you're like, okay, well, that's kind of expensive. But, Amazon's at $2,500 basically a share. So when you look at valuing stocks, you look at the PE ratio, which is down here in the second column, so 25. And then the forward PE is based on the earnings adjustment of 21. So that's how you look at whether they're cheap or not. Go ahead and put Amazon AMZ in. So in there you have, the PE that's much higher, but then again, it almost gets cut in half. So when you look at that, it's like, okay, it's got a high PE, but their forward PE in the next quarter even is almost cut in half. So when you take that out to what is Amazon going to look like for 1 to 2 to 3 to 5 years, it can seem very expensive right now, but it's actually not expensive if you think of all the money they're going to make in the future. So it's kind of a future income stream thing. That can be confusing to folks. So I wanted to throw that out there. If that generates any questions, go ahead and put it into the chat. Okay, let's go back up to the big board for Schwab. And go over to the short-term names. Okay, as far as, I think I saw some longs go into the chat now. Longs considering Zoom, I saw they're going up. AAXN we'll have to take a look at and work. All continuations, so that's again another, when you hear Apex Predator use the term continuation, that means generally from when you're talking gaps, and we use a gap strategy, is we're looking for a gap up or down, and then to ride that momentum of that gap, so in the same direction. Gap fill strategy is it gaps, you think it gaps too far and comes back and retraces some of it. Or if you look at a continuation strategy, probably AMC, if you remember, kind of day one was a short, beautiful short. You could short it for like the next 3 days because it took a while for all those to sell off. Hertz was another one after Nelson Peltz left, multiple day short. You could just either hold it or take it every day. Those are continuations. Luckin Coffee was on a continuation for a while. Once trading back up, opened back up, you saw that multiple day. So that's a continuation. So we'll take a look at those names there. We'll get back to the Amazon competition here in a minute. Okay, let's since I've seen Zoom, let's put Zoom up in the screen here. Don't know if this was headline or not. Well, lawsuit headline, that's not the best news out there. All right, they closed at 204, gapping up to 211. I did see a headline, and I can't remember exactly what it was, but it was a good news headline of how Zoom is really getting their act together and moving forward with encryption and all that, I believe. So a small move up there. We'll keep an eye on that. And let's go ahead and put work in there. Work is Workday. I believe they had earnings yesterday morning, so you can see the chart is kind of straight up, if you will. They closed at 37. They're sitting around 39. Again, another work from home name. So that would be, well, that thing's on it. That thing is on a roll. Basically straight up from 30 to sitting at 39 right now. Okay, and then let's look at the AA. Sorry about that. It is Slack. You're right. Slack Technologies, Workday's WDAY. Thank you. So this is Slack that has the ticker of work. Thank you for that. Okay, let's look at AAXN. Okay, I don't know what these guys do, but they are gapping up a little bit and no headline. So Predator, if you know what they do, okay, taser makers, gotcha. So yeah, so that's your theme. So if you looked at the gun stocks from yesterday, put in a Ruger RGR. So obviously the big move up. Again, the gray is the you see the big move up and then a big move down, and then move back up again. American Outdoor Brands is another one. That's the old Smith & Wesson. So names you could look at, again, might continue. They've already had a pretty big move. All right, so on the left screen, let's go back into, we don't have our things across the bottom. We'll come back to that. Okay, over to the tabs. Let's take a look. Nothing moving big on the first tab. Lots of volume, but not enough of a gap. Go to the next one. Okay, I believe RH Restoration Hardware, if I remember right. Not enough volume. Okay, there's the volume in Zoom. So we could look at Zoom long. I want to pull the chart on that for myself to see the history on that as well. Pretty big run, but also I think it was up over 200. So we'll look at that on the other screen, if you will. I'll look at it now and share it with you in a little bit. So all right, let's go to the next tab. Guardant Health and QTS Realty Trust both qualify. Let's look at GH. SoftBank / Stake. Looks like there's a secondary offering of 14, I see 11 above and I see 14 down at the bottom. Oh, that's QTS, has a secondary offering. So both GH and QTS have secondary offering of shares. So what's that? That's called dilution, when the company issues a whole bunch of shares. So when you think of, say you're an Apple and you hold your share, which is $325, a piece, and the company issues a whole bunch of more shares. Well, your Apple's still the same number, but there's more shares out there, so it's diluting your actual fractional ownership of the company, which is kind of a big deal. So very negative for the headlines out there. So QTS and GH would be a short, and GH has the combined headline of the fact that SoftBank slashes stake in it, and they have a secondary offering. So secondary and a slash on GH, so that makes it more attractive in my mind. And then I just put NGL up top. I just see that it's gapping down 9%, 35,000. So a little bit of a hit on volume there on disappointing earnings for NGL. So if you wanted to go with a lower price point stock, it previous closed 573 down to 526. So that would be NGL short. If you're interested, that's a little higher risk than I think than GH there. Okay, let's see if anything else. Beyond Meat down just 2%. Lulu we talked about earlier, that's run up so much. You could almost pull the Lulu chart. I mean, look at this move. That's 5 days and it's gone from 272 up to 310. That's not a gap down. That's not our strategy, but you could certainly go. You could short into Lulu here. It's a strong name, but especially if the market turns out red today. All right, let's go to the next tab. There's slack towards the bottom again. And click on Western Union up top there. See what they have going. Maybe that's a significant improvement. 8K, so that's earning. So Western Union gapping up. If I remember right, aren't they the wire money people? So closed at 20, it's up at 23. So kind of a big gap, up 15% on, well, it's got the volume. So Western Union could be a long that we could take a look at. Okay, and let's click the last one. And don't see anything jumping off the board there. All right, let's go over to TD Ameritrade to the screen. We're going to put GH. No, actually, we're going to put Zoom into the big screen and then kick that out to a daily chart. Sorry, other way. Kick it out to a daily chart for Zoom. There you go. Okay, so here, you know, here's your, it's a long from the gap, but look at where that's been. That's pretty tough to think that it continued to rocket higher from there. So let's look at GH short in the upper right, and then QTS short in the lower right. So those are the names. So again, you would have a long in the big screen and then a short over there. Check those are 1 minute todays. I think they are. Yep, you bet. And we can go into Zoom. We can go to the 1 minute today. I just wanted you to see the bigger picture there before you would hop into this trade. Go to the, make that your pointer and you'll be good to go. The drawing tools to the pointer. Yep, there you go. All right, so we'll work through that. So we got a couple minutes here, or about 1 minute prior to that, so get your trade in. I will take GH short 40 cents. Yep. All right, so got a Predator trade in there. I've got a trade in there. That looks like it and Zoom along. There we go. So NGL, we got burner one in there waiting for the bell at this time. So we got NGL QTS. Let's go ahead and take the lower one, and instead of QTS, make it NGL. So burner, you're on the lower right there is your trade. So again, the screens on the right are short and the one on the left is long for Zoom. Okay, Zoom's not having the best time out of the gate. $2 stop, okay. So for Predator there. So it opened at, if you want to draw, opened at the top of that bar there. So it looked about 210. It's hard to see it now. It's right there at that part right up. So 210.20 and a $2 stop would be 208.20 down here. So it appears that it held that right there and then is going higher. So man, that thing is moving. So you get that at the higher dollar stocks out there. Let's go to the board on the right. Looks like GH popped up in the first minute from, it looks like it opened at 82.40, and that's me. I had a 40-cent stop, so 82.40, 82.80. So I'm busted out of GH. No bueno there. And let's look at NGL short. So NGL opened at 525. You got right up to 545. So it looks like NGL just busted out. Man, that's a crazy move higher on NGL. Crazy move higher. Okay. I do want to show you, like in the GH, when you see that double top in the GH, so point to that right there. That's kind of what you're looking at for the perfect entry. So I know our trading game, if you will, goes from the, the opening minute. I've talked about, hey, let's back it up to where you can pick your minute. If you look at like an opening, if you get a double top that's right here, if you can point to that area right there, that's that sign of, okay, it ran up, so let's take the short right there. And if you take the short at 83.40, then you have that stop significantly higher and you give yourself a better entry point. Same thing for burner on NGL. You kind of have a double top area forming there. If you take the trade here, now your math and R's are based off of different things for your short. So we'll see if both of those continue down from the double top points that I'm talking about. All right, and Zoom is all over the place. We shall see what's going on there. I'm going to look at the overall market, kind of see what we have going on. Okay, NASDAQ went in the red already, and then the Dow and S&P are fading a little bit. So we'll see. Certainly for our shorts off to the right, we're busted out of them, but have we got a little better entry point there? If the market rolls over red today, then we shall see. I don't think it'll go red on social unrest. It would go red basically from taking a breather from the big run up we've had for 4 or 5 days. So we'll take a look at that. All right, so Zoom dancing around, and then Zoom just busted out there. So you can see even with the $2 stop, sometimes those things can be difficult there. And I do think Zoom was going to be tough for it to continue that much higher after it's run up so much, but that's just an opinion. So I do kind of like the trades off to the right a little bit better. Okay, in the main screen, let's take out, let's look at QTS. Again, this was a short that we had looked at. So just like GH and NGL, you had it back up at the open. So you had it kind of climb up, which is that short covering. You had the double, actually a triple top there, and then it went from there. So again, when we get into the advanced stuff where we're talking entry points, that is what you're looking for as far as the entry point of let it back up against you, get a higher slice, and if you take it at 640, 64, 66, then you can give yourself maybe another $1 to the upside for your stop, and then you can watch it fade from there. So we'll see. Let's see. The last one was I wrote down WU long. That was Western Union. Had gapped up 15% and kind of faded at the open. So again, that would be kind of like what we're talking about in the opposite direction, where it comes in, you take the trade, and then watch it go higher from there. Western Union, I would not, just due to the name and what they do, I would not be excited about holding that stock long. So when you look over at the big left-hand board, what's in play today as far as NWBO, again, that sold off yesterday about 20%, so that's a bounce off of that. MMEDF is a psychedelic name that's been in play. Love, Southwest Airlines, LCNB, small bank, sold off yesterday, so a bounce today, excuse me. BXMT, we talked about BX earlier, is Blackstone. They also have kind of like GM, General Motors has General Motors Finance, and Ford has Ford Finance. Well, you can think of Blackstone as the parent private equity company, and then Blackstone Mortgage Trust as, you know, kind of their finance arm. BXMT pays a 9% distribution because most of their loans that are out are around the 10%. So they loan to a lot of the higher risk businesses that are out there that the banks won't loan to. So that's why they command a higher interest rate and then pay it back to you. DAL, Delta Airlines, doing well today. Boeing, a name we talk about regularly. And then O's up there as well. All right, and then let's click to the downside, see what's selling off. Top three are options on Salesforce and DraftKings. Could they possibly be down today? Down 3% in DraftKings. Again, I entered around the 11 to 15 point. It's up over 40. It's been a little crazy. I did have a friend reach out yesterday and said, after we've watched this thing almost triple, does DK stand for DraftKings, or does it sound for Donkey Kong? Because it's been on like Donkey Kong. So kind of a funny from there. Those next two names, the Shroom F and the RVVTF, those are both psychedelic names. So it's kind of strange to see one psychedelic name at the leaderboard and the other one's down at the bottom. So that's interesting. Maybe there was a best of breed headline out there. Okay, and that is about it. You can go back long. I did see Facebook in the red there. Again, there's going to be, if you saw the walkout at Facebook of his own employees for that Zuckerberg because he refused to go in and censor some of the stuff that's coming out. So there's more to follow in the social media space. So I still like Facebook from the advertising revenue, which is how they make their money. So, we'll go from there. So, all right. Good call. AAXN, again, was the taser maker. So gapped up significantly from, continuation up. So would you have hit a 3R on a gap up from AXN? 91 probably with a dollar stop. So 94, you would have made 3R out of the gate with a likely trade of trade into AAXN with a dollar stop, and that would be a long trade. So that one worked out pretty well. Looking off to the right, looks like GH is pretty well stalled out at its open price, or its current price there. And then NGL still trying to go short. We'll see if it sells off or not. Okay, let's hit the chat here. We'll leave those up on the sideboard while we look through the chat. Yeah, you talk about Amazon having any competition. I would certainly not say eBay isn't. Conceptually, that would be a competitor, but I would say that's kind of not anymore, right? Their big competitors are Walmart, Costco. They both have now significant online presence. Like I don't go to Costco anymore, but I order stuff off of Costco.com. My wife will go to Costco and kind of load up on the stuff, but I bought an air conditioner and, not air conditioner, but air purifier and some things I'll buy online. Actually saw from Costco, you can get a home mortgage through Costco. So I may actually have to, when I go through my refi, take a look at that. So kind of interesting, but yeah, I think eventually if anybody's going to run into, monopoly concerns, that's exactly who would run into it. Would be Amazon, because they're going to continue to grow, especially if they buy like Delta Airlines for their own network, right? That'd be interesting. Strip out the seats, put stuff in it, call it good. There's all kind of, when Amazon bought Whole Foods and everybody went, what? And then they said, well, we don't really want the stores. We just need the retail floor space. Put stuff. It's like, ooh, man, brilliant, right? I know eBay's out there, and I don't hear anybody really talking about it anymore so much. So, all right. That's that piece. So let's look over here. Is there a long stock that we like but has run up quite a bit? Is there an ideal time to wait to buy, or is it really a mental process? We didn't buy at the low, but we still like it for the long term. Yeah, let's put Apple into the big screen and go out to a daily. So yeah, so when you're sitting at, let's go back a year, so all the way to the left-hand side of the chart at 180, talking every day. Oh my gosh, I wish I could get a better entry point in Apple. It's $180 a share. Oh, blah, blah, blah. It's so expensive. If I could just get a better entry, right? Well, you can end up waiting for the train that never comes is the problem. So generally with stocks that have run up, which Apple had run up to 180 at that point, you kind of have to close your eyes and buy if you don't have any. If you have some, then you are looking for that opportunity. I see kind of a glitch here. Last August, I don't remember the headline, might have been the iPhone 11 release. A lot of times if you're like Apple, you can go, okay, when's the next release of their products? They generally release in the fall, so that Apple September timeframe. If negativity, so Apple, remember, they keep everything quiet for a while, and then if they start getting negative, a lot of negative sentiment, they'll start leaking stuff out intentionally, little teasers to kind of get the excitement back up. But if you don't have Apple and you want an Apple, then wait for their news cycle. Every time a new phone comes out, not every time, but generally there's going to be a hit, right? Because there's going to be all this anticipation. So there's the buy the rumor, stock price runs up, you find out what the actual phone looks like, all the critics and trolls in the world pick it apart. So then the stock price comes in, and then that's your buy point. So that's kind of the best you can do. That's not going to be more than a few percent. Or you can wait for something that hits the overall market. But when you really look at this, say you had been wanting to get into Apple at 327, it gets up to 327 there. And you're just like, gosh, I'm never going to get a break. Well, when it drops to 310, well, it actually gapped down to around 300 to 290, that may be the break you want, but you had to look at what's going on in the overall market at that point. Yeah, the market started that free fall, and it was probably going to continue. So you're going to end up buying, basically, if you bought anywhere between the absolute low of 220 and 260, that 3 weeks at the bottom of the V, I would consider that a win. In investing, you never buy at the absolute low, and you'll never sell at the absolute high. But to buy in that range or to add in that range is a huge, I would consider that a victory all day long. But even if you're like, crap, I missed it on the way back up, and it just goes north of 300 here when it moves up, 10 days in a row. Even if you buy there, you're going to be happy. Again, don't worry about what you bought it for. Worry about where it's going to be in 10 years, and it's going to be at 1,000 or 2,000, something like that. Same with Tesla. I'm not a Tesla fan. I am of the car, not of the stock. If you have to have some, close your eyes, buy a share or 2 shares, whatever. And then if it goes down, add some more. If it doesn't, then you got what you got. Okay, that's how you handle that. All right. Does the actual stock price matter? Now, I've had this conversation a few times. Let's pull up Amazon in the big. When folks say, I want to get in there, I'm like, you need a couple shares of Amazon. So we're just going to buy them here. And they're like, well, it's too expensive. Look, it's 2,000 a share. Why don't I get Apple? It's only 300 a share. Like I said, that has nothing to do with it. It's all fractional owner of the company. So it's all into that price to earnings, which is, the price over the earnings per share, which when we talk about, there's more shares, share dilution that messes with that ratio. So it's not really a measure of how expensive it is. What I like to say to folks is, you know, you just pay for a piece of it. So sometimes companies will do a share, different share classes. So put in BRK.A. So this is Berkshire Hathaway that's going in there. Never split from the get-go. This is Warren Buffett's stock. Actually, just do BRK. It's not going to pull up there. You can go back to Amazon. But when you pull up, let's go to, actually, let's switch to Schwab real quick. So we're going to pull it up in Schwab. Go to the main layout, if you will. And we're going to share that over so I can take a look at this. So when you look at BRKA, there's A and B. So we'll put BRKA in the upper left. Hopefully it'll take and show us the chart. Yes, that is what we're looking for. Do it without the dot. Just put the A in there. No, it's not going to show us. So BRK actually come down to, we're going to get there, CNBC and search quotes. So Berkshire Hathaway, obviously Warren Buffett's conglomeration of stocks from so there we go. Actually leave it on the screen if we can, or go back to it. So the screen that we're going to get back to you, so BRK A and B are both on the same screen here. You can see the BRKA is $276,000 a share. Okay, not a lot of volume in that movement. That's the original Berkshire Hathaway. So we're talking folks who bought it for, you know, $50 way back in the day in the 60s and believed in Warren Buffett, and they held it. Now, BRKB is a special class of share that doesn't have voting rights. As member, as a shareholder, you have voting rights, and that's an important part of it, that you can get into at a lower price. And if you put the two charts side by side, which we're having a rough tech day, so we won't try to do, but you would see that they basically track each other almost equally. Under Armour has two classes of shares. And it was largely the reason why Kevin Plank got run out of town. It's because he has UA and UAA. And there's different price classes. So, or one's voting, one's not. It was trying to power play. It makes things ridiculously confusing. So stop doing that. Google, I would say they didn't necessarily start it, but if you invest into Alphabet, which is Google, you can have put GWG up top there. And you'll see that there's not only GWG, which is the Class C, that's the non-voting share, but there's the one with the L on it is actually the voting share. So if you don't care about voting shares, you can get a couple bucks off by going into the other one. So trade slightly at a discount. I'm going to put UA in there since I was just talking about it. You can see you have UA and then drop down two more. You have UAA. And it's UAA has the voting rights. That's why it's a little bit more expensive per share in that case. So it doesn't really make a difference what the stock price is. It does to you, depending on the size of your portfolio and to make sure you're diversified and all the things like that. But it doesn't in the big picture. Yeah, 100 shares of BRKA. I like it. Okay. Market cap, yeah, but that can be confusing too, right? Because does Zoom really have the combined market cap of, you know, all the automakers put together? It's kind of like, really, is that actual or is that a flawed metric too? It's something to consider, if you will. Okay, you can take that out. All right, should a stock split or reverse split, and why do that? Well, the stocks do split. So let's go back up to the Schwab board. We'll share that out while we're watching here. And that way you can see what the market's doing. NASDAQ's in the red. SPY's about to go red. If a stock split, so if Apple would split, they could do a, what is that, a 3-to-1 or 2-to-1, 2-for-1 split, 3-for-1 split, and get their share price back down towards 100. You can do that to maintain a more palatable share price for shareholders that are worried about stock price, which is not your professional investors. We're talking on the retail side. Or if you want a little more, like if Disney would run up, because Disney has a program where they say, hey, you know, buy your kids shares of Disney, let it appreciate. So obviously they would want to keep Disney out of the 4-figure range, right? You're not going to probably drop $1,000 stock on your kid. You might, but so that's why some companies do that. Literally, if you were to do a 2-for-1 split, it's literally as if you had a bunch of $10 bills and you traded them all in for $5 bills. That's it. Nothing changes. There's no financial engineering or crazy math that changes the value of the company, whether it's a buy, sell, or hold, any of that stuff. It is simply just an accounting piece to move the stock price down. So you used to see stock splits a lot. You don't see them anymore because people kind of understand that now. Now let's talk reverse splits. You can do the same thing, a 1-for-10 split, where if you were, and I'm trying to think offhand who has done one, but if your stock price drops below $5, you can do a reverse split to engineer that. So you would trade 10 shares of, say, GE if they drop below $5. So say it's at $4, you would trade your 10 shares of GE at $4 for 1 share at 40. So when you look at the long-term charts, just like click on Under Armour's chart. Actually, we're up at the top, so that's okay. So when you look, if Apple had done a split, they go back in time and adjust the chart for those splits. So that's why you don't actually see the jump in the chart. So you don't actually, it's synthetic, right? So they take as if that split had already gone through. So that's how that works. And in a reverse split, sometimes there's fractional shares. If they can't give you the fractional shares, they'll actually send you a check in the mail for the actual fractional part. So, DIG did do a reverse split. So let's pull DIG. Yeah, I was holding it at that time, and Apex, you might have been too, since you remember that split. So DIG had split. It was down in the $6 range. So yeah, this was a 10-for-1 reverse split. So find 60 on the chart there. Yep, right in there. So we had when oil futures went to 0 and it got crushed. Well, the time to buy back in was on that big move up. And I generally don't do oil or natural gas for trades, but this one was just too much of a no-brainer to go in and buy it. So I bought these at around $6, and then I check, TD, my app. I'm in Schwab, sorry, but I checked my Schwab app, and the next day it's up, 900%. It's like, yeah, okay, it actually went up 900%. That was the app hadn't caught up. But what had happened is it went from $6. They did a 10-for-1 or 1-to-10 reverse split. So now the $60 stock price was the same as my $6 stock price. So it takes a day in accounting. So if you ever log in or you check your app or whatever, and you see this account that you're like, oh, that can't be right. You're right. It's probably not right. So that's a good example. Thanks for bringing that up. Yeah, Apex. Yeah, same thing. It's like, woo, nice one. I'll take a 10 bagger there overnight. Pull up AZO, see if I can get what Predator's getting at there. AutoZone. Yeah, you can put a note in there if you have it, Apex, if they're looking at maybe a split. We shall see. AutoZone's another play where you can consider from a work from home environment. You're kind of like Home Depot, fixing your own stuff. You don't really want to go out and about a whole lot, but you will go to the auto parts store to be able to fix your stuff. So that's an interesting thesis as well. It should split. Well, there you go. You can write a letter to the CEO. So let's come down to I want to show you one last thing before we talk bonds real quick, because bonds are boring. Google, Apple, Amazon E-minis. Okay, click. Nope. Just put trading in front of that. What I'm trying to find here is, so you think options, right? You can't, yes, click on that. Go back, sorry. So when you think of, can I trade options in Amazon? And There, that should be, no, that's gonna be a book. The Amazon's a bad one because of the Amazon. Go Apple E-minis, trading Apple E-minis. So what an E-mini is the stock. Here, this one. What are E-mini futures and why trade them? So I won't go into that, and we'll stop clicking around so we don't get Tourette's. But when you go to trade options in a larger stock, it's tough to have it. Not everybody has 100 shares of Apple. If you do, the premiums are awesome as far as what you can get, because not many people can swing a bat at that level. So what you will get is an E-mini, which is basically 10 shares. So a normal contract, and this is talking futures, but applies to options. A normal options contract, like futures, is 100. Well, this is now a mini, is where it's 10 shares. So there's actually, you can get access to the E-minis and trade the E-mini options. Obviously, if you're in that space, it's kind of little league. I don't know that it's going to be worth your time, but anyhow, that's how you can do it. So you don't have, if you have 10 shares and you want to do a covered call on your Apple position, you can do it. So, all right, let's go. Let's just go back to the big board for Schwab, and I'll close with what's going on in the bond market. If you got to have any bonds in your portfolio, they have not largely recovered. And I said they would, right? So if you think back to March, so looking at, any of the charts that are above for the big six, you can see that we had the big stimulus package at the end of March, early April. The Fed's going to go in and prop up the bond market. Well, the bond market has largely not recovered. It's still kind of a buying opportunity there, but you have to be patient. And the reason is the bond market's about 6 times the, it's way larger than the stock market. So I've heard about 6 times the stock market. Well, more companies that went out, issued a bunch of bonds, and they're still issuing stock right now, or issuing bonds right now. So issuing new debt, and as long as people are buying that up, people as well as the Fed, they're snatching all that up. So unfortunately, the Fed thought they could come in and kind of sop up the extra supply, but they found that companies are just putting out more supply. So it's not really fixing the problem. I don't have any concerns long-term about the problem being fixed. It's certainly not getting fixed in the short term. So that's why if you buy a bond, par value is 100 and you buy it at 84, well, when it matures, it'll be at 100, but that may be 5 years from now. If the bond market recovers, you'll see the price getting a lot closer to 100 and sitting there while it finds 100 at the actual maturity value. So it largely hasn't recovered. So something just to keep an eye on if you have bonds in your portfolio and you wonder what's going on. All right, so that's it for the day. Looking at if you look in the upper left, that kind of tells you where the markets are. So NASDAQ looks like it's actually getting closer to coming back to the green. So about even, and the other two are up a little bit. So, all right, that's all I've got for you today. So thanks for tuning in, and we will see you tomorrow at the same time. So talk to you soon.